This is getting to the point where it's really hurting people, especially those out of work and looking for jobs and those on the lower end of the income spectrum. As gas prices continue to rise, it hurts. Can we offer any hope to those people today that something good is in sight?
Well, not a lot right now. We've seen average gas prices jump by about 12 to 13 cents a gallon in just the past week, and global oil prices, which clearly feed into these, futures prices are continuing to rise. They're about $109 a barrel. Now compare that with just $96 a barrel less than a month ago. So for now, the increase is continuing, although we have to stress it's impossible to know where this thing will head months from now. I see a lot of forecasts going, $5 a gallon gas at least by Memorial Day. Not necessarily true. We can predict for weeks to come, but not several months.
Oil prices, for instance, fell more than $1 today, but we don't expect that to show up at the pump that quickly. That doesn't impact things that quickly, does it?
No, just a daily jump or a decrease in prices doesn't make an impact. We've seen a clear increase in the past month, and you really have to track these things more than just a day or so out.
What of the possibility of the president tapping into the Strategic Petroleum Reserve? Is that a distinct possibility at this point?
Well, it's a possibility, but I really don't think it's likely, not now. And the reason is because tapping into the Strategic Petroleum Reserve can deflate the bubble in the short term. But if there's a real long-term push because of fears of a war in the Middle East, and that's what seems to be pushing this now with tensions growing over Iran, then a change in strategic petroleum reserves, tapping into them, it may help for a few weeks, but it's unlikely to have a big impact in the summer and fall. And we've got an election in November and not in March.
What do you see happening in the markets this coming week, Richard?
Well, we saw a slight increase for the markets last week. We really have seen a very strong performance so far this year for the stock market, and also late last year. This morning, we have the Standard & Poor's 500 index, which is really a better gauge of big stock activity than the Dow, at a record high for the past 4 years. It's now back up to where it was in the spring of 2008. And so the market's done very well. I think we might see with these rising gas prices a drop in the market this week, quite likely.
There are reports out of Reuters this morning that U.S. fund managers are starting to put money back into Europe in a sign of returning confidence in the Eurozone. Is that a big deal?
It is a big deal, and it's been one of the reasons why the markets have been going up in the past few months. And that's because we saw fear over Europe and the possible collapse of the euro and real concerns about the growing financial crisis behind the stock market having troubles in August and September of last year. But things have really stabilized since then. And one reason is the European Central Bank has acted quite decisively to help Europe's banks recover from the worries of a lending freeze. And what they have done is go to the banks and say, look, we will give you pretty much unrestricted access to money, 3-year loans at 1%. And the latest bunch of those loans, in fact, is going out this week. So, yeah, I think it's reasonable that a bunch of money managers are looking at Europe with a little bit more calm rather than fear now compared to last year.
Okay, what kind of economic reports are we awaiting this week?
Pending home sales out this morning, and then we also have a report that's come out already this morning from the National Association for Business Economics. These are the people who crunch the number for businesses around the country, and they say that growth this year is likely to be fairly moderate, like around 2.5%, which is no great shakes, but they forecast an improving jobs market, and they say they're much more confident now than they were 3 months ago that there won't be a double-dip recession this year. So that's hopeful. Pending home sales coming out this morning, and then we also have a fairly busy week for things like consumer confidence, manufacturing, and several other reports, including home prices.
Richard Davies, he's our money guru around here, ABC correspondent. Richard, thank you very much. We appreciate it.
Thanks a lot, Paul.